Welcome back to the channel, everyone. My name's Adam. NAT reported their Q1 2021 results yesterday. I wanted to do an update yesterday, but school, life, research got in the way. Of course, I'm completing a master's degree, so better late than never. So we're going to discuss NAT's Q1 results. And let's basically go first with the expectations. So the analyst estimate was a quarterly loss of 16 cents per share, and they hit exactly a loss of 16 cents per share. Revenue were expected to be 20.47 million, while revenue actually was 16 million. So they actually missed on revenue expectations. And I expected this stock to actually trade lower. But I mean, as you can see today, it's up by close to 1%. And I mean, yesterday it was up by about like 0.84%. So that was surprising to me, but that just tells me that the market is forward looking. And aside from what NAT included in their Q1 report, I do think that revenues will go up because spot rates will go up as OPEC eases restrictions and oil goes up and the world comes out of lockdown. So that's the key overview here. Of course, NAT is sitting at $3.63. I mean, even though over the past like 1 year, you can see a downward trend here, down 17%. Even if you're looking at the max, they went online $18, and now of course we're down by close to 80% from their max in 1997. They issued more shares. They have quite a bit of debt. And we're going to go over that as well as my concerns with Nordic American Tanker. And excuse if there's noise on the outdoors, just because people are doing construction here. They're mowing the lawns and stuff. So let's just take a look at some of the highlights. So it is essential to understand the NAT strategy to formulate a view on what the future holds. This is commented upon later in the report. Normally, a setback in oil demand is followed by a forceful rebound. We are now at a positive turning point for the NAT vessels. I feel like this is what they've been saying in like the past two reports. But again, I actually do think that we are at a positive turning point. And I mean, as early as the summer, we should see a drastic increase in oil demand. We've already seen that. So production of oil goes up following increasing oil demand. The upward move in the price of oil in raw materials such as steel and copper has increased the value of our fleet by more than 100 million over the last few months. So they have 25 ships. So they're saying that because of the price of commodities increasing, which AKA is inflation, their cost per vessel has gone up by about 4 million since they have 25 vessels, right? So that's, I guess, good news. This strengthens NAT, which has an expansionary perspective. We believe that the global economy is poised to enjoy a robust growth going forward. This is good for the NAT business. As seen in the past, small events can turn the market in our favor. The closure of the Suez Canal a few days during the first quarter served as a reminder of how finely balanced the market is. One ship too many pushes freight rates lower, and one ship too few does the opposite. And right now, I think we're sort of in the middle ground where I think we have a bit too many ships out there, which is pushing the freight rates lower, as we'll see in number 4 here. So despite OPEC oil production cuts during Q1 2021, the average time charter equivalent, TCE, came in at 9,400 per day per ship, an improvement on the previous quarter that gave a total TCE of 8,700 per day per ship. So this is a nice improvement from 8,700 to 9,400. That's a $700 increase from previous quarter, and I hope that this will continue into Q2 2021. And hopefully maybe we'll be sitting at around maybe $10,000 per day per ship. I mean, last year we saw rates coming in at like 30,000 per day per ship. So absolutely bonkers. Except for one, all our ships are working on short-term contracts. An upswing in demand will immediately increase the NAT results. The operating costs per ship are about 8,000 per day. So you might want to ask, well, why did they lose 25 million if their operating costs are at 8,000 per day and their TCE came in at 9,400 per day? That would suggest a $1,400 net income there per day per ship. However, you have to take in like depreciation expenses as well as interest on their debt that they have to pay. So the first quarter of 2021 produced a net loss of 25 million, which is negative 16 cents of earnings per share. This compares to the previous quarter, which was negative 19 cents. So this tells me, again, a little bit better than last quarter, but still not very good. 16 cents, loss of 16 cents per share. Like, no one wants to see that. But again, just a slight improvement from last quarter of negative 19 cents. They also are paying a dividend of 2 cents per share, which is announced on Friday, June 4th, to be payable on June 18th. So as long as you're a shareholder by June 4th, you'll get the 2 cents per share dividend, which right now is sitting at about 2% dividend, like, for the full year. So if they keep paying out 2 cents per quarter, that represents basically 2% of dividend payout. Okay, so not much at all. So right now I have 350 shares. That means I'll be getting $7. So I mean, not a tremendous amount, but I mean, we'll take it nonetheless. But I mean, I think they should be focusing on less on the dividends and more on paying down their debt and potentially share buybacks, which they're actually doing the opposite of. This is our 95th consecutive dividend. So of course, like, NAT has a history of paying dividends, and I think a lot of the shareholders are in it for the dividend. So, I mean, maybe this is like a PR move and they just need to pay out dividends because they're a dividend paying company. So they go on, this point is kind of irrelevant, saying that they're the second largest shareholder in the company. Our industry network and close customer relations with major oil companies and traders are based on trust, fleet quality, and our people. The quality of our fleet is proven by vetting, inspections undertaken, etc., etc. The company has zero tolerance for corruption. Again, this line always gets me. They always announce when they buy shares, but not when they sell shares. I mean, that seems, it's not corrupt, but it seems you're keeping information away, so basically lying to shareholders. So yeah, I don't know if I agree with this statement here. And what they're saying here is, of course, NAT has a very old fleet. So what they're saying is that despite their old fleet, all their ships are basically good to set sail and set voyage, and they're not going to be taken to the scrap yards yet, okay, even though their fleet is really old, which is one major criticism of NAT's ships. So yeah, now they have 25 Suezmax vessels, including 2 new buildings, with a cargo lifting capacity of 1 million barrels, which they believe are more versatile than the VLCCs, which carry 2 million barrels of oil. The operations of the Suezmax fleet have not been materially affected by the pandemic. Main challenges have been related to crew changes, and we're following guidance, etc., etc. I mean, I think it has been severely affected by the pandemic, mainly in the sense that spot rates have gone down, and that has hit their bottom line. Okay, so as you can see, they're losing like 25 million just in the first quarter of 2021, even when oil demand is picking up. But I do think that Q2 2021 and beyond will be better, as can be seen in the spot in the stock price. I mean, it's not like a massive decrease of like 5 or 10% in the share price, which means that investors, as the market is forward-looking, investors are seeing this and being like, oh, okay, well, you know, they lost 25 million or 16 cents per share, but in the future, they'll be earning money, okay? So yeah. So their long-term debt stood at 329 million, which is a little concerning. I mean, right now you're looking at a company with a market cap of 563 million, and their debt is 329 million, which is basically like 2/3 of their market cap, which again, a little bit concerning. And they talk about exactly what portion of the debt relates to what deal, and the current portion of their long-term debt is close to 17 million from the CLMG bank deal, Beal Bank, and 8 million from the Ocean Yield financing. And then they talk about their financing from their 2 new buildings. So they also issued a bunch of shares. So during Q1 2021, the company issued 1.8 million shares with gross proceeds of 6.4 million under the 60 million at the market established October 16, 2020. So, I mean, NAT is infamous for doing this, for repeatedly putting out shares on the market. And I think this is why we've seen a major decline in the stock price, like since 1997, basically when they were trading at $18, is basically because they're putting out so many shares into the market, okay, which we'll see on their financial reports. But basically, to me, that's a little bit concerning, just because, I mean, I think they're basically going to dilute themselves into basically oblivion until like their share price is under $1 per share, okay, in the next few years. So, I mean, short term, I don't think this is as much of an issue, but long term, I do not want to be an NAT shareholder just because I think it's pretty poor corporate governance to keep paying out a dividend despite them being in a pretty precarious situation, and all they have to do is keep issuing shares to pay out their paltry dividend of 2 cents. So that's just my 2 cents. Of course, I will still be holding my shares just because, again, I think that better earnings are definitely coming for NAT and the oil tanker market in general. But if you're going to invest in oil tanker stocks, honestly, I would recommend investing in maybe EURN or Frontline instead of NAT. And that's just my brutally honest opinion. Of course, I'm an NAT shareholder, but I just have to say I like EURN much better in terms of its corporate governance. And yeah, so they talk about the economy here. So what is good for the world economy and world trade is positive for the crude oil tanker business. OPEC oil production cuts are easing from this month as world oil inventories have decreased rapidly on the back of strong oil demand in the Far East and a cold winter in Europe and the States. We believe that this marks the turning point for tanker market as oil producers around the world will start adding barrels to the market in the coming months and years. And I wholeheartedly agree with this sentence, and I think that this is the key of why of NAT stock price has not plummeted. With all of the stimulus spending, potential infrastructure spending, this is in relation to Biden's 2.3 trillion infrastructure spending on roads, EVs, etc., houses, you name it. Continued quantitative easing, strong consumer and business balance sheets, and a euphoria around the potential end of the pandemic. We believe that the global economy has a potential to have a robust multi-year growth. Again, I totally agree with this. The only thing that I would state is that if inflation does rise to quite drastic levels, this may make the Fed have to rise interest rates sooner than they wanted to, okay? So which would definitely slow down growth, but I do think that oil is going to have a nice recovery, especially with, everyone trying to go on vacation, and again, I believe the clean energy, the time of clean energy is definitely coming, and there is an end to oil, but I think before that will happen, there's going to be major increase in the demand for oil, okay? And we've been talking about having peak oil for the past 30 years, and that has not happened yet. And spending on green energy requires a lot of oil up front, okay? So historically, every setback in the world, oil demand has been followed by a forceful rebound the following year. The above combined with a muted fleet growth bodes well for the years to come. So they talk about how there's 546 vessels at March 31st, 2021, 13 conventional Suezmax vessels was added, and 9 remaining to be delivered for the rest of 2021, and 26 for 2022, and 3 for 2023. And they talk about how it's inelastic in the short term. So basically, when too many ships are in the area, rates go down. When there's a scarcity of ships, rates tend to go up. So if you're looking at the long-term rates, I think that NAT is playing a smart game and going through this rough time to come out of it in the end, and having more ships when there's a scarcity of ships to have a lot of net income when a lot of people see, okay, well, there's an increased demand for spot freights, so they're going to build ships, but then by that time NAT has already taken advantage of it, and since it takes about 2 years to build a vessel, it might be too little too late, basically. So yeah, let's just take a look at a little bit at their financial statements. So again, their net voyage revenue came in at 18 million. Expectations, I think, were 25 million? No, 20 million. So just a little bit below that. But again, the markets overlooked that. And they had a net operating loss of 18 million. If you look at their depreciation expenses of 17 million, operating expenses of 37 million, et cetera, et cetera. And they had other interest expense of 6 million plus some income of 28 million. So their net loss, of course, was 25 million. And here, look at the common shares outstanding. Okay, so December 31st, 2020 was 151 million. Of course, before that, it went from 147 million in March to 151 million in December, so in a couple of months. And now they went from December to March for the quarter, from Q4 to Q1 of 2021, 151 to 153 million. So again, to me, this is slightly concerning. I mean, of course, as a long-term shareholder, you do not want to see this. You want to see share buybacks, not share offerings. And I just don't really like that. And excuse me, there's an eyelash there. If you're going to look at the total liabilities and shareholder equity of close to 1 billion is 949 million. At least this was a bit of an increase, or at least they state, based on from 974 million in Q4 of 2020. And I think probably part of this has to be from, actually no, they depreciated their vessels, but probably by not by much. I don't know why the main one here, maybe inventory went up, and they have other current assets as well went up. So that's probably the main line there. So yeah, I think that's it. So overall, I mean, I think this was in line with what I expected NAT to do. Of course, they were going to come out at a net loss. I think that they're going to come out at a net loss as well for Q2 2021, and then hopefully pick up in the back half of 2021 going into 2022. Okay, so I'm in it for the long game. I mean, it sucks that we're just going to get like a $7, or well, for me, a $7 dividend based on 350 shares. But again, hopefully we'll see a nice share price appreciation, and that'll get out of NAT. But of course, I'll be covering oil tankers for some time to come. So yeah, consider leaving a like if you'd like to support me. Consider joining the channel. Subscribe if you haven't already. Take care. Cheers. Have a fantastic day. Let me know what you think about the NAT earnings report. Cheers.